Hey guys, welcome to another video brought to you by Total Control Traders. Let's get right into it. First one, SPX. No major concern yet. After this dip to the GP and the lower trend line, we saw a great move up to that one-to-one extension target 44.25, and from there we have been hovering around that zone between the one-to-one extension target and the previous all-time high. So we've back tested multiple times. We closed right on the daily 8 today. That is a little bit of a concern due to the previous two upper wicks that we are seeing. But overall, this is a daily bull flag right now. Even with the bear divergence that was formed, as you can see down here, there was lack of consolidation. Right now, bull flag formation, no real concerns. Next is NAS. NAS is a little bit weaker. Overall, still a similar formation. We are seeing a same idea, pullback. Now there's no GP here because this move was a very strong move, this previous move. So regardless, it was pullback same time as SPX, and we moved up to near that 1 to 2 extension target from this previous move, and near touch of that area, lost the daily 8, still hovering around it. This is not necessarily a daily bull divergence on NAS. It is looking a little bit weaker volume wise. It is low bear volume versus the bull volume. I'm gonna have to give it a couple more days to get a clear direction. Right now there is a shorter term upper trend line forming where we saw triple rejections already, including today, and there is a longer term lower trend line that we're looking at for potential. There's been 1, 2, 3, 4 bounces already, so watch the two trend lines. Now if we were to break the upper trend line, we're going to be watching for this next upper trend line here that saw 1, 2, 3, 4, 5 rejections already. And as for SPX, just to go back, if we were to confirm the bull flag formation on the daily, we would be looking up at this upper trend line in the channel, or the trend line just above that, which is just another way to draw the channel. And as for Russ, personally I do believe that there is a sector rotation going on, from whether it's from NAS or from other sectors going into Russ, the small caps. Based on this, you know, the bear price action begun earlier than SPX and NAS, and it was a little bit stronger. Now the bull move is a little bit stronger. Now if we're to zoom into a closer time frame, this has been a really easy chart to play. So we entered a bull here, and then from the break under this trend line we exited, and from the double potential reversal candle, including the crazy bull volume here, we entered bull again and then exited somewhere around here. So it's been the easy chart to play in the sense that as long as you can identify the patterns. So if you look at the daily, there's been a long-term, this solid green line, that's a long-term wedge. Now this dash green line, you can also see rejection, 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 broke over, broke under, over again, and then became support, under, and rejection again. So there is notable price action on this upper trend line. Then there's lower trend line, 1, 2, broke under, 3, 4, under, now potential of 5th support. So all 4 of these trend lines are very notable. The orange ones are the Ethereum ones. If we were to zoom into the hourly, we can see that this Ethereum trend line, 1, 2 rejection, almost touch, 3 rejections before breaking over and then coming back to back test, and almost touches the back test again and then touching it again today. Now today is very interesting because today is triple confluence, so I did take a additional entry, well, in and out kind of thing. So today was at the end of the day, additional entry on TNA, which is triple bull play on Russ, IWM, whichever you're playing. So with this one, triple confluence being, one is the backtest of this trend line that we just talked about, second being the near that trend line, that inter wedge lower trend line, the green one. Let's make it white, that'll be easier. Okay, maybe not easier. What about? Nope, don't like that either. Let's do blue. All right, let's do blue. Oh, that's hard to see. Jeez. Yeah, that's a bit easier. Okay, so that what do you call it? Middle tighter wedge, whatever you want to call it. The tighter wedge lower trend line. That's second confluence aside from this hourly downtrend line, as well as a 0.5. So there's triple confluence right here. I am anticipating a bounce. Basically nail that bottom here, right at that touch of this trend line. Gonna see tomorrow. There's a little bit of concern on Rust now. It is in a 4-hour uptrend. So actually, even though it is in a overall 8-hour uptrend, higher high, higher low, higher high, potentially looking at a higher low now. But the concern is the hourly. If you look at the hourly, it's just been straight chop. You know, goes up, straight sell off, goes up. This is yesterday or Friday's open straight bull and then straight sell off the next hour. Same with today, open straight bull and then straight sell off. So that's a little bit of a red flag, medium red flag, I would say. So just be careful, and we are seeing somewhat of a lack bullish price action so far in the after hours, but this should pay attention to this. Definitely pay attention to bullish action followed by straight selling off. Okay, today was very notable in the sense that bullish action, straight selling off with the same bearish volume as the bullish volume. So very notable. 4 hours potential for a trend change, even if it's a trend change. You know, with the TNA play, I think we should be safe from bounce. Let's say if we were to bounce here, or even the GP, we should be looking up at a bounce to make a lower high before making a lower low. So Rust is a little bit more complicated. I do believe there is sector rotation into Rust still. Main concern is whether the market is going to pull back as a whole. So next is Dow. Dow has been hovering around. So we did make new all-time high on last week, Friday, Thursday, Wednesday, Tuesday, Monday, the week before. So we did make new all-time high on the Friday before, and then we've just been hovering around, and now we just lost the bull flag formation because we lost the 88. However, we did not lose the main support yet at 348.31. That is key to hold for bulls. So as of right now, the market as a whole, I don't believe there's any major red flags yet. If we look at the US dollar, it is dropping a little bit as well. It's pulling back a little bit. And let's just do a quick fib drawing here. So GP is still quite some ways away. Are we at the 0.382? We're bouncing from the 0.382. Look at that beauty. Love it when the tools work out. So bounce from 0.382. Bounce looks weak as of right now. Gonna have to give it a couple more days. But with the US dollar pulling back, shows that market should continue to be strong. Similar idea with US 10 years. US 10 years yesterday or today was actually a decent, at one point was decent 6% drop. End of the day at 4% drop. So still showing bullish market. Gold market, gold is daily bear divergence, slight bear divergence. If we're to lose this 1788, would anticipate further bearish action on gold, meaning should see further bull action on the market. All right, let's get into the hot tickers. First one, BTC. Nope, that's not the one. This one, BTC. Okay. Congrats, BTC bulls. We wicked from under that key trend line, broke over it, but now this is a little bit of a red flag. We were looking for that bull flag formation before next leg move up, but instead the bulls ran it early, and now we're getting rejected early with increasing bear volume. So that is a red flag on BTC bulls. Once that 88 is lost, I would anticipate further downward price action to come, with the GP being around 34,000 mark. Doesn't really line up with anything. 0.5 somewhat does. You know, you see supports back here. So if I were to draw or anticipate where the pullback would go to, it would be somewhere there. You can see support, support, multiple supports here, support again, and then became rejection. So that 35,692 lines up with the 0.5 fib. If we lost the GP, or if we lost the 88, that's the price target that I'd be looking at before any sort of reaction for bulls. Next is HIVE. And why is there two? Anyways, okay, still in the wedge. This somewhat shows, you know, it's my anticipation, because it is confluence with the upper trend line of the wedge as well as the key zone, would anticipate a rejection here before. So what I'd be looking for is you come up, touch this upper trend line, reject down here, and then probably break over. Something like that would be textbook play. Would look like this: a rejection of the confluence zone coming down to the support, maybe not as low. Seems like this might be a good area, so somewhere around there. This would show a strong retracement, maybe even up here kind of thing, and then breaking over the trend line, back test the trend line before it go. That would be a textbook play. That's what I'm looking for in HIVE. Next is AMD. Congrats, AMD bulls, just continues to go. So with this, as mentioned before, it is a blue sky breakout, new all-time highs, momentum, huge bull volume. There's no reason for exit yet. Okay, even when we extend it on the 88, there is a chance that, no, there's a decent chance that we're going to continue to run. And let's say if we were to draw the 1-to-1 extension target, let's see what that would look like. So we just got over the 1-to-1. Next one would be looking at 1 to 6.618. It's a little bit far away. So watch for a potential reaction around 113.38. Next target will be 121, which I would say a psychological target or a psychological resistance around 120-ish. AMD is continuing bull with no signs of, no red flags so far. Watch for that volume climax. Watch for that reversal candlestick. Right now there is none of them. There's no reversal candle. There is no pop in volume. Next is Tesla. Tesla just broke bull on last Thursday. Key chart to be that should be on your top watch. Based on today's candlestick, I would anticipate some sort of consolidation. Not to mention a little bit extended from the 88. This is a key break. Volume increasing, bull volume. Potential for bear divergence. So based on this candlestick alone, I would anticipate a pullback before the next leg move up. So it gives opportunity for those that are not in yet. As for the pullback wise, depending on how fast we go, you know, you could be looking at somewhere probably around here. Ideal and realistic would be somewhere around there. Let's see. Yeah. This is what I would be looking for. Now, we might not get the back test of the wedge. We might get the back test of the wedge. Ideally, I think we don't want to get the back test of the wedge as a bull if you are in the bull position, because that would be a little bit further pullback than most ideal. If we're looking at pullback wise, See, that makes sense. It's around the GP. If we pull back past this point, then we'd be losing the GP, meaning that we'd be losing the momentum. So with Tesla, keep it on your top watch. At this point, it's gonna be hard. You know, might be a good entry if we do backtest this trend line. But at this point, I think even if we were to backtest this trend line, that would be a very ideal entry already, which would be the GP of this whole move so far, before the next leg move up. And I do believe there is higher prices to come on Tesla based on this technical break, unless we break, of course, unless we break all the way down back into the wedge, meaning this is a breakout fake out. All right, next is ABNB. Airbnb, slight break over the wedge today, the long-term wedge. Okay, so let's take a look at this. Airbnb, multiple rejections on this trend line, upper trend line, 3 supports on this lower trend line, and now we have seen slow algo walk up. There is no reason for exits yet. I believe it's 4-hour 8. Yeah, 4-hour 8 is your guide. You look at this, we have not closed under. We opened under, immediately bought up. So many lower wicks. Open down under, immediately bought up again. There is no reason for exit. 4-hour 8 is your guide on the daily. There is no concerns either. We're not extended from the daily 8, increasing bull volume. 1-to-1 extension target, we are, no, sorry, 0.382, we're looking at 150. GP, we're looking at 162 to 164, which lines up with the lower part of the key zone. That would be the ultimate first target, I would say, before a consolidation backtest of this 152 zone, 152 resistance. Yeah, backtest, make it a support before the next leg move up. Now today, we're to zoom in closer today. Today is a very interesting day because we had increasing bull volume. You see this 130, this is Friday, and 730 outweighing that 130 on Friday. Then 8 o'clock outweighing that 730 again. So increasing bull volume, low bear volume, and then we immediately backtested the wedge upper trend line. Immediate backtest, but we did not see follow through. Market started pulling back, so ABNB started pulling back a little bit. But even with market continue pulling back into close, Airbnb started showing some strength with volume, bull volume coming in. So Airbnb is another one, probably the second one, if not the first one, that should be on your top watch. AMD, Tesla, ABNB, they should all be on your top watch. AMD should be continuation. Tesla, potential pullback. ABNB, want to see that continuation going into tomorrow and next and the day after. And the next one is Hood. Robinhood, for those who are playing. Now this chart, I personally don't like playing IPOs. Maybe I do sometimes, depending on how fast I am. But I did not play this one because I was looking to short it, and I actually tried shorting it, but there was no shares to short. So anyways, so with IPO, Robinhood, Hood is actually looking a lot better than anticipated. It opened up at 38 as expected, as announced, or whatever you want to call it. It ran up, same as any IPO. Now, if you have experienced enough IPOs, you would know that this is the behavior of most IPOs. On the moment that it opens up, it should generally run up. So let's take a look at the open. So the open, it ran up, or it looks like it ran down before running up, and then it started continue selling off. So that is the most common case for IPOs. Okay, and on this, Hood is actually holding up very nicely, though the volume is not there. So I would anticipate once we get to that 30, yeah, unable to break that 38 mark today. So I would anticipate a further downward price action over the next week or two. This is gonna be now the key resistance for sure. Decreasing bull volume. For those of you that are watching it, if you're in a bull position, understand to take some profits. You may not want to be all out because it might be something that you truly believe in. So as long as you believe in it, you're willing to give it time. But just all I can say is remember, take some profits along the way as you can. This chart is clearly telling you that 38 is going to be hard to break. So if you sell just under 38, and then even if you buy back above 38, what's that? Cost you like 10-20 cents difference, but that safety, it'll be worth it. Okay. All right, let's go to the requested tickers. First one is the QS requested by Sarah. So QS, we looked at it last time. We looked at it, I think it was on this day, 28th. What is that? Wednesday? Yeah, last Wednesday. And broke bull. It was looking good, increasing bull volume, or big pop in bull volume, not increasing bull volume. Excuse me. So big pop in bull volume, and the next day we saw continue selling off, but not matching the bull volumes. Today was actually very interesting because when I was looking at it, we were right about, yeah, we're right just breaking that 30-minute 8. So I thought about taking a position, but the market did not look so promising, even though that this looked promising, you know, increasing bull volume, breaking over the 30-minute 8, and potentially breaking over that top key zone, meaning that we're going to be holding that on the daily. We're going to be holding in the top of the key zone. So with this, easy play. You know, even if you were to enter right now, still a low risk play. Your stop would just be right here, right under $21 on Tuesday, right under $21 from the earnings. I do see more upside to this. So even if you were to enter right here, your risk is about 8%. Your reward is still gonna be about 30% plus. Oh yeah, 30, 35, 38, 40 kind of thing, depending on how long you hold it. So this doesn't apply. This probably doesn't apply for a while. Sorry, that was me looking at vacations. It's been too long since we've been out. All right, so GP, we're looking at 28. Doesn't really line up with anything. 0.382 does line up with his previous supports. So 25.45 would be the first target. Watch for what the reaction looks like. I wouldn't necessarily say sell it over there. Maybe like a third position, the quarter position, at least, you know, you lower your overall average down a little bit. And then watch for what the reaction looks like from there. Increasing bull volume. I like the chart. Lots of potential. So as of right now, I would say short-term wise, we're going to want to see the continuation holding that 30-minute 8. Of course, ideally, market with the market behind helping with the move. Next is an NNDM, and this is for Peter from YouTube. So I took a look at this earlier today. Drew a couple zones, drew a couple lines. Nothing major. Two zones I'm noticing is one is right here in between 491 to 614. The other one is above is 908 to 1049. And as you can see, we're starting to hover in between the two zones. So almost touch. Anyways, come back. Rejection, touch, rejection. Now we're touching it again. So this could be an easy stock to trade over the next little while. There is no actual patterns that I can see right as of right now. You could say that there's a potential for a wedge forming here, but that wedge looks a little bit too small to me, in the sense that, you know, we would get a break relatively fast. And watch for the earnings coming up on August 10th. So this earnings could very well make the wedge, the lower trend line of the wedge, even lower, meaning what you could be looking at is the price action coming down to here before a next leg move up kind of thing. So then if that's the case, then your wedge would be a lot bigger all of a sudden, right? So as of right now, there is, if you're looking for an entry, I wouldn't say take an entry. It is sort of, first of all, no pattern. Second of all, potentially in the middle of the pattern to be developed. Easy way you can play, you know, you could, shorter term wise, you could take an entry. You could take an entry, actually, this key zone seems a little bit off. You can probably draw a bit higher. too high. Okay, yeah. So you could take an entry right about here. It is slight increase in bear volume. So if you take an entry at about 617, your easy stop would be 596. What is that? 20 cents risk to, 20 cents risk to $2 upwards, 1 to 10 risk to reward. Why not, right? So that could be in play. That could be a play, but the only problem is earning coming up. So just watch for that. If it does plan out the way that you're anticipating over the next few days before the earning comes up, make sure to take some profits so you don't swing as much into earnings unless you know what's going on with the earnings. You're spending the time reading the financial reports. But yeah, and then NNDM, somewhat of a low risk play right now. If you want to give it more time, you could put it at 539. I wouldn't recommend it. Seems like an easy stop right here. 596. All right, next is SCR. Oh yeah, okay, that's why. Score 13. Oh no, we closed a little bit lower. 12.14% move today. So on the Canadian side, for Score specifically, I don't look at the US side as much. So for Canadian side, we had anticipated $17 mark roughly around there as the low to be in, and we got to 1753, and then we came back again to 1782. And now with today, with Canadian market closed, we saw a 12% move on Score. I do believe this is going to be the low is going to be in on Score, and we will be looking at a move towards the upper trend line again, meaning there is another 31% potential going forward. 20%. So right now you're in the middle. If you're not in, there's no point entering right now anymore. You're in the middle, no man's land kind of thing. We did break over this key support resistance at $17. Very notable. Tomorrow, let's see how the Canadian market affects this, whether if we're going to go shoot it straight back down. I don't believe so. The volume looks really nice, but let's see what tomorrow brings. Score looking very nice. Keep it on your top watch if you're in. Obviously, if you're not in, there's no point keeping it on your top watch because the move is already done or started. Next is MAR. So one of the top charts I was watching, aside from AAL, CCL, BA, all that, or reopenings, ABNB, MAR. The one that I decided, I don't know why I decided not to enter. Oh, actually I do know why, because it's a slower mover. Overall, the price actions, it'll move a lot less percentage wise, but look at this perfect move. Holy, for those of you that did watch the video when I covered it, whenever that was, and decided to take an entry on MAR, good for you. Congrats for that bullish play. Okay, let's do that. Look at that. Close it. It's close. It's not perfect. This one is not perfect, but it's close. Hey, the notable trend line that I drew out, one touch, two touch, and now being a third touch on the gap down of all reopening, majority of the reopening stock. I believe they gapped down on this day. I can't remember what the news was, but everything gapped down, and then boom, it's just been a straight shot up, and now it's forming a daily bull flag. However, it is increasing bear volume, and it is bearish engulfing candlestick. Earnings is coming up on, is that tomorrow? Earnings is tomorrow, so if you're in, well, you can't really do much anymore, but if you are in, the 88 is your guide. If you aren't in, watch for where that pullback, the higher low, is going to be. But this was a beauty of a play. For those of you that got in, congratulations again. Let's see. Let's draw a fib here. So what makes sense? Well, most ideal entry, if you're not in, most ideal entry would be the GP, which lines up with the previous top of the key zone. aside from that, 0.382 is around that notable previous support at about 140, less than $1 off. 0.5 might actually work too. So lots of zones. I do believe there should be a little bit more downward price action to come based on today's candle and the increasing bear volume. Next is BA. So BA gap filled, and we are right at that lower trend line. However, we did lose the daily 8, so it's a little bit concerning. But if you look at this, high was 225.70. Today's, really? That's not what I remembered. Weird. Oh, I was looking at this. Okay. So the daily did gap fill yesterday, Friday already. 225.50, 225.70 was the high, and we gap filled yesterday. So it's a little bit of red flag that we're continuing to see bearish pressure today. A little bit decreasing bear volume. GP is lining up with this lower, what do you call it? This upper trend line of the lower channel. Yeah, that makes sense. So there is a double potential of lower trend line here. So it does line up with this upper trend line. If we lose this lower trend line of the wedge, we'll be looking at the GP, and that would be, I would say it's an ideal entry. No real selling yet. I would take an entry here, yeah. Okay, next is, oh, there's a couple more I wanted to cover. 1, 2, 3. Let's take a Nvidia too, so I'll call it 4. Okay, first one, Apple. Watch for Apple opportunity coming up. For those of you that are not in, be patient. However, it is going to take a few days. So earnings has came out, and we have seen potential of marking the top again with dividend on August 6th. A lot of people, so do understand on these major companies, a lot of people get in on the dividend, and so if you look back, you'll see that further selling off past the ex-dividend date. So dividend, you know, huge sell off, and then dividend again, and this was a little bit less of a sell off, buying up and then selling off again. And this one, similar idea because it's right in the middle of an uptrend, but there was still some selling off. However, today with this cycle, this time potentially being marking the top, we could see a decent sell-off post ex-dividend, but keep your eyes on it. I will be looking at a core entry on Apple. I love what Apple does, you know, over long term. It's been a sideways movement for such a long time. We're breaking bull. We could be seeing another, even though we are breaking to new all-time high, we could be seeing another 107. Ooh, what is that? February, July. Wow, 5 months. We could see another 5 months of sideways action before new highs. Understand that. So use that to your judgment as you are buying your entry. Next is Amazon, which is very similar to Logi. Now Amazon, huge gap down on earnings, and we are right at the trend line, right under the GP. There's no sign of recovery yet. Give it a couple more days. I do believe, you know, the general rule is gap always gets filled. So it might take a month, it might take 3 months, it might take half a year, but hey, it's a yeah, I don't know how else to say it, but it's a almost guaranteed not losing position. Gap will get filled. Okay, and stocks eventually always go up, and that's why I say even if it takes 6 months, a year, you will be seeing a profit on this. I do believe the gap should get filled sooner than 6 months. So did take a position on this, looking at potential reversal, holding the, well, we lost the trend line, but we're not seeing follow through. So I like that so far. Haven't been stopped out yet. From here, I want to see a reversal soon, please. Next is Logi, very similar idea. Gap down on earnings and no continuous selling off, no follow through. We are right around that key trend line as well. Did lose the GP, however, so that's a little bit of a red flag. From here, we are seeing a hold of the 0.786, decreasing bear volume into today. slight increase in bear volume. So as long as this 0.786 holds, I think there is a good potential we see gap fill over the next week or two, maybe 3. But if that is lost, then we're probably looking at further downside to come. And then last but not least, haven't looked at this in some time. So A, B, earnings is what? Am I tripping out? You guys seeing this? August, it says August 2nd, 2021, right? And that's today, isn't it? But why is it all the way out here? Huh. It's dated on August 18th, but the date is on August 2nd. Anyways, so earnings coming up. I'm thinking high potential of the chart going to look like Amazon. And in case you forget, so we did predict an ABC correction, even though most people were thinking, okay, there's further upside here. But this was a relative easy count in the sense that it was 1, 2, 3, very notable, 4, 5, and it matched all the rules of Elliott's wave. I always get them mixed up. It matched all the rules of Elliott's wave, and that's why huge potential of ABC correction, regardless of what causes it, and just so happens to be earnings, ABC. So, and if you look at the extended hours, yeah, makes a lot more sense, right? So with Nvidia, now that I'm looking at the chart, it is looking like potential of a similar pattern. 1, 2, okay, the 3 doesn't really work out as nicely. Oh, it does. Okay, look at this. 1, 2, 3, 4. Extended run for 5, maybe. But would anticipate a C to come. Yeah, that's right. So it would be, let's just draw this out. A, B, C to the GP would make sense. That's what I would be looking at, would anticipate. Unless this key resistance that we're having trouble with breaks, which is right here. Right around 200. 1, 2 rejections so far. Can't even get to that 200 actually. Slight increase in bull volume. But yeah, give it a little bit more time, then you will know whether it's going to be making new all-time highs or coming further back for further consolidation. All right, so that's it for today's video. Thank you guys for watching. Hope you guys enjoyed the content. If you know people who can benefit from the videos that we provide, please do consider sharing the channel with them. Consider subscribing. Thank you for watching. I will see you in the next video.